Come to topic number 2 on Introduction to Economics module. This is the topic on public finance, and we are saying that public finance is simply how the government is able to raise and spend her finances, and some of the sources of finances for any government. Number one includes fines imposed in court by offenders. So we have so many people that have committed offenses in various courts. If they are found guilty of the offense, some of them will be fined. For example, somebody has been involved in corruption, and the court is able to prove that they really did amass wealth, then part of the directions that the court could give is for this person or these people to be able to pay fines. Then the other one is government borrowing, and the government can be able to borrow internally. Internally means within the financial market in her borders, and externally, where the government borrows from external institutions. We have institutions like the International Monetary Fund. We have institutions like the African Development Bank and many other institutions. Then other sources of finances include rent and rates paid by the use of government property. The other one is license fees paid by those who want to operate businesses. Anytime that you intend to start and operate a business, you have to pay license fees. That is a source that the government is able to raise quite a huge amount of money. And then, of course, you are expected to renew these licenses annually. The other one is dividends and profits earned from government direct investment. So governments also invest, and when they invest, they're also entitled to dividends, just like at individual level. When we invest in shares, we are also entitled to dividends. So when they receive these dividends and profits, it becomes a source for them to be able to raise their revenue. Then we have through taxes. That is a major one. That's why we have having the final statement indicating that we have two main sources of government revenue, that is government borrowing and taxes. And so this is a further clarification on government borrowing. Internal borrowing, I have already explained how it happens. Borrowing is done within the country. We can also go to the banks to take loans within the country, and also government bonds, or what we call government securities, where individuals would be invited to lend the government money, and in return they will get interest at specific durations of the year. And then we have the external borrowing. I have already mentioned that, IMF, World Bank. Now when we combine internal borrowing and external borrowing for any nation, then that becomes the national debt. And this debt can be further classified into number A, what we call reproductive, where when we get this debt, then we use it to finance projects that can be able to generate revenue. And the deadweight debt is the money that is used to finance activities that do not generate any revenue. For example, when we pay salaries, when we fuel cars, if we borrow any amounts and we use them for these particular purposes, then that kind of a debt, we call it the deadweight debt. Taxation, we have said it's a main source of revenue for governments, and we are saying it refers to the processes that governments are able to raise revenue. And why do governments tax individuals and companies? Number one is to raise revenue that is used by the government in providing goods and services. Number two is discourage consumption of certain products. for example, beer and cigarettes. So if you look at tax or taxation for various products in different countries, you're going to see that whatever the government wants to discourage people in consuming, or they want to discourage people to consume, they are going to charge and tax more on those particular areas. And of course, as they do that, they know because of the huge consumption also, they can be able to raise a huge amount of money from it. The other one is discourage importation of certain products in order to protect local industries. The other one is reducing inequalities in income distribution by taking the rich and taking from the rich, or taxing the rich and using the proceeds to finance activities that benefit the poor. And finally is to control inflation by reducing money supply through reduction of people's income. So sometimes taxation is done to be able to reduce the supply of money in the economy, or in the market. Then now, once the government has finances, then they develop a statement of what we call the budget. Is a statement of government revenue and expenditure for a particular financial year. And we are saying, for example, in Kenya, a financial year is going to run from June to June. June this year or the previous year to the June of the current year. And when we develop these budgets, we can have three kinds of budgets. We can have what we call balanced. Balanced means the expenditure is equal to revenue. So that's why we are calling it balanced, and we are saying we are having an abbreviation of B is equals to BR. Then we have a deficit budget, and we are saying here that the budgeted revenue is less than the budgeted expenditure. So we have budgeted more than we have. That is what we call a deficit. So it means we have to look for ways to finance what we don't have. Yeah. And then the surplus is that in this type of budget, the budgeted revenue is more than the budgeted expenditure. So in surplus, we simply mean that we have in excess of finances as compared to the projects that we want to put in the money. So why do countries need budgets? Number one is to identify the government revenue. Also what we can say, to be able to identify the sources of finances. The other one is to allocate available revenue to where it is needed. The other one is to help control unplanned expenditure by the government. The other one is to formulate measures to curb inflation in the country, e.g. selling of treasury bonds. Remember, when you sell treasury bonds, you invite citizens to bring in some monies that they have, and in doing so we reduce the money that is in circulation. And finally is to establish policies meant for redistribution of income equitably. We can have policies on tax relief, on low income earners, and so on and so forth. So that has brought us to the end on topic number 2. I expect you to understand why we need a budget, understand the types of budgets, understand the sources of government revenue. We have a list that we have looked at, and we have talked about the main ones, which is the taxation and government borrowing.